Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the weekly time frame with the highest probability scenario, which is the bullish scenario, where we have a double 1, 2, 3 finished, waiting for a wave 4 before then a continuation to the upside. The common target for a wave 4 is between the 0.236 to the 0.5 Fibonacci taken from the low of 2 to the high of wave 3, giving you a target area between 63.3k and 53.3k, with the 0.618 being an invalidation for wave 4 at 49.3k. The lower probability scenario is the bearish scenario on the weekly time frame, where we're looking for a regular flat to the downside. Now, a regular flat is already a lower probability flat, as the most common flat pattern is an expanding flat, where wave B moves to the target area here, the 1.236 to the 1.38, 98k to 122k, taken from the high to the low, while the 1 to the 105 is a regular flat target, which is where we are right now. In this case, you want to see a bigger impulsive structure to the downside to hit at least the common target area for this wave C. That target area is between the 1 and the 1.236, trend-based fib extension taken from the high to the low of A to the high of B, giving you a target area between 16.5k and 11.6k, with the 1.618 being an extension target at 6.5k. Important support for Bitcoin in that case is between 10 and 9k. We have the golden pocket from the low to the high, as well as a multi-year volume profile value area high. If we then continue talking about the higher probability weekly scenario, which is the bullish scenario, and look at the bullish structures locally, then we are over here looking at a regular flat structure, a 3-wave A, 3-wave B, and a 5-wave C, which in this particular scenario is finished as we hit the common target area for this wave C twice, ending a diagonal over here inside this wave C. In that case, we are then looking for the low to be in and a continuation to the upside. So if we jump to the 15-minute time frame, we are here then looking for a finished 5-wave impulsive structure to the upside in a wave 1. We want to see a 3-wave corrective structure in a wave 2, after which we want to see impulsive continuation to the upside in a bigger wave 3. The common target area for a wave 2 is between the 0.5 and the 0.786 Fibonacci, taken from the low to the high of this wave 1, giving you a target area between 62.5k and 60.8k. And we do have some additional support in this area between 61.7 and 62k, which is also on top of the golden pocket, and below that we also have at 61.1k the point of control of this little structure here, this range. So that is also again additional support inside the common target area for that wave 2. At the moment, price bounced on the 0.382 Fibonacci, which is an uncommon target for a wave 2. In a strong trend, it is a target nonetheless, right? So we have to keep it in mind that at least the lows have touched the target area for a wave 2, the 382 to the 886, but naturally, probability-wise, it is a lower probability target compared to the 05 to the 786. Time-wise, this wave 2 is still doing perfectly fine. The vertical lines on the chart are fib times, taken from the low to the high of this wave 1, and then you double click over here to compare with wave 1 with wave 2, and these lows here are made around the 1-to-1 fib time, which is perfectly fine. We're now ranging around the 2 fib time, that's also cool, but we don't really like to see this wave 2 moving towards the 4 and the 5 fib time. That would be very long for a wave 2, starts to reduce the probabilities for a wave 2 as well, with the 4 fib time being a Sunday, that is tomorrow at 5 a.m., and the 5 fib time is Sunday at 3 p.m. So that is quite interesting, because of course those are weekend days, and naturally in a weekend price likes to range. Now, potentially with everything around the halving and all the news, we might see some volatility, but we gotta wait and see, of course. If we then look at the more bearish scenario, then we expect one more low inside this wave C for again a regular flat ABC pattern, but then we have a 1, 2, 3, 4, 5 wave move, where preferably in this scenario wave 4 is now finished with the most recent impulsive structure to the upside, either in a running flat for an ABC Z, or a W, X, and then a wave Y with a flat structure in Y. In both cases, you're ending with the impulse to the upside over here, and this range is too long for a wave 4 compared to a wave 2 if we count it as a 1, 2, 3, 4, 5. Besides, you already hit the 618 taken from the low to the high. So that's already an invalidation. So therefore, we actually want this wave 4 to label it as an invalidation at 65.5k. If price is moving towards the upside and hits this high here, probabilities are going to reduce for this scenario and increase for the more bullish scenario, where we eventually look for continuation to the upside. The official invalidation for a wave 4, however, is that 0.618 on my chart, taken from the high of 2 to the low of wave 3 at 67.3k. However, as mentioned, preferably this wave 4 is finished. We want to see price moving towards the downside, hence the reason the invalidation now is also this high. Time-wise, this wave 4 is still perfectly fine, ending before the 4 fib time, with the fib times taken from the low of 1 to the high of wave 2 to the low of 3, comparing 2 with 4, and anything before the 4 is perfectly fine. You don't really like to go to the 5 or the 6 fib time for a wave 4, which is Sunday the 21st of April, 8 p.m, and that is also Tuesday the 23rd of April at 10 a.m. If we zoom into the 15-minute, thinking about that bearish scenario, where then preferably this is your high and we want to see impulsive structures to the downside, we only have 3 choices to the downside. With this being the high, we either want to see an impulse to the downside, a 5-wave structure, a diagonal, or a double 1-2 before then a big drop to the downside. So let's go through them one by one shortly. Starting with the impulse, we then want to count a wave 1, 2, 3, 4, 5. I have to go to the 5 minutes for this one because you can count somewhat of an impulse in a 1, 2, 3, 4, 5. However, this wave 5 is longer than your wave 3, while your wave 3 is already extended, which is therefore not preferred. Also, if this is your impulse and all of this is your correction, that is a very, very long corrective structure. If you take a fib time from the start to the end of that impulse, you can see that we passed the 4, the 5, even the 6 fib time as well, which is not what we like to see for a wave 2. So the probabilities aren't great for an impulse. So then we have a diagonal structure, but if you simply start to pull some trend lines here, you will quickly notice that we have an expanding diagonal, and an expanding diagonal is never preferred, always has the lowest probabilities unless all of the other stuff fails. And then we have a double 1-2 and then a 1-2, 1-2. We want to see a big move towards the downside, volume coming in as well. But with a double 1-2, we have a bit of the same problem as the impulse, which is the length of wave 2 and finding a second wave 1. As mentioned, we can count somewhat of an impulse here towards the downside, right? 1, 2, 3, 4, a 5-wave move. We can't label this a 1, 2, 1, 2, 3, 4, 5, 4, and then a wave 5 to the downside, right? So this needs to be the end of your first wave 1. Then likely this the end of your first wave 2, right? And then a flat structure here for an ABC, even though this looks like very much like a 3-wave structure instead. But then eventually we need to count a second wave 1. Even if this is not the end of your wave 2 and you're going to park it over here or over here, well, then your wave 2 is very long, so that's not ideal. So preferably somewhere here we have a second wave 1 to the downside, either here, another 1, and this is then 2 and a move down, or 1, 2, 1, 2. But as you can see, it becomes very, very messy, and therefore currently that double 1-2 is also not having the highest probabilities here locally. If we look at the CVD divergences, then we do have some bearish and bullish CVD divergences. Now the bearish CVD divergences already played out on the chart. The bullish CVD is not with the actual low that we have over here, which would be preferred. It's now with the higher low, this range over here, higher low in price, lower low on the CVD. I do prefer to keep an eye on the CVD divergences on the right side of the recent high, but it is still good to know about. So if we then look at the probabilities of the different scenarios, Then on the weekly time frame, probabilities are higher for the bullish scenario compared to the bearish scenario. On the 4-hour time frame, the probabilities at the moment are also higher for the bullish scenario, where the low over here for your wave C is in, compared to the scenario where we're looking for one more low, and that is simply because of these structures on the 15-minute time frame and on the 50-minute time frame. Then the probabilities at the moment are also higher for the bullish scenario compared to the bearish scenario, meaning a corrective range here sideways compared to a bigger impulsive move towards the downside. However, in both cases though, the probabilities would be higher for price to move inside the common target area for your wave 2, which is the gray area as explained when talking about the scenario, as that is the common target area for a wave 2, and the 382 is an uncommon target area for a wave 2. But if price moves towards the downside, then by all means we always have to look for proof of support, not YOLO, FOMO, catching knives. We want to see some proof of support. We want to see price holding over here, candlestick patterns, RSI, whatever you want to look for, CVD, anything, market structure changes that gives you the confidence for price to move towards the upside. And if we don't see that, well, we're simply going to look for lower, even though it doesn't have the highest probabilities at the moment. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.